few days, allowing for a sideways motion to maintain. Yet yesterday and during today's Asian session, bearish tendencies seem to emerge, yet tend to remain highly uncertain. In this report, we aim to take a different approach than usual and focus mostly on major fundamental issues that surround the US stock markets. Some market worries tend to stem from the possibility of a hard landing of the US economy from the rate-hiking path of the Fed. It's characteristic that the expansion of economic activity in the US manufacturing sector seems to be slowing down, if not contracting for some months now, but also the non-manufacturing sector is experiencing a slowdown. Furthermore, the tightness of the US employment market is easing, and it was characteristic that in the August employment report, despite the NFP figure improving, if compared to this respective revised July figure, the unemployment rate jumped to 3.8%. Overall, the possibility of prolonging the usage of high interest rates by the Fed may have an intensified adverse effect on the US economy on a cumulative level, and that seems to be the intention of the US central bank in order to curb inflationary pressures. On a more positive note, the market seems to be solidifying its expectations for the Fed to remain on hold in its September meeting, a scenario that may imply that the tightening cycle of the bank has reached its end and tends to erase market worries for the possibility of the Fed going overboard. Any fresh indications further solidifying the market expectations that the Fed has reached its terminal rate and is over with hiking rates is expected to boost market sentiment and thus support the US stock markets. On the flip side, any further indications of a possible hard landing of the US economy may have an adverse effect on US equities. At this point, we would like to highlight as the next possible risk event for the US stock markets the release of the US CPI rates for August next Tuesday, and should the rates show an acceleration or even a stubbornness to slow down, we may see the market worries for the stance of the Fed intensifying and instigating a cautious stance that may weaken the US equities markets. Furthermore, we note that the market seems to be worried for the recovery of the Chinese economy. It's characteristic of how the Chinese manufacturing sector is struggling that the industrial output growth rate slowed down for July beyond market expectations, while the NBS and Caixin manufacturing PMI figures for August tended to send mixed signals. Specifically, the NBS manufacturing PMI figure remains below the reading of 50, thus implying a continuous contraction of economic activity since April. Furthermore, we'd also like to highlight the troubles of the Chinese construction sector, with companies such as Evergrande, Country Garden, and Logan Group being indicative of the situation. Overall, any signals that the Chinese economy is slowing down are expected to force the market to adopt a more cautious stance, thus possibly weakening US stock markets on a fundamental level, as a considerable slowdown of the Chinese economy may cause an economic slowdown on a global level. There has been lots of buzz among market participants for the event of Arm Holdings Limited going public. The SoftBanks company, which is a British semiconductor and software design company based in Cambridge, has already launched its roadshow for what is considered to be the blockbuster IPO of the year. Currently, the company is trying to convince potential investors that it has a market value of $52 billion. SoftBank is reported by Reuters to offer 95.5 million American depository shares of Cambridge, England-based Arm for $47 to $51 apiece, and is looking to raise up to $4.87 billion at the top of the range. The IPO and subsequent first day of trading is expected to be between the 13th and 15th of September. Furthermore, it's been reported that the company signed up a number of its major clients, including Apple, Nvidia, Alphabet, AMD, Intel, and Samsung. SoftBank is to own 90% of the share capital after the IPO, and it also added that it will not receive any parts of the proceeds, a scenario that enhances Arm's potential in the future. On a more fundamental level, given the nature of the company's business segment, we highlight that the risk factor involved as microchips are in the epicenter of the US-Sino trade wars, and also tend to highlight any part of the company's transactions with China.